Hello and welcome into today's episode of the Crypto Report. Today is April 18th, 2023. Before we get started with this episode, let me preface this by saying this episode is going to be a little bit longer than our normal episodes. There's a whole lot of important stuff that's going on. And if you're into crypto and if you're into the stock market, it is going to be extremely important that you listen up. Because we're going to go through some interesting stories. Let's just say this before we get started. I am bullish on the crypto front. I am not at all bullish on the U.S. economy or the stock market. Also, if this is your first time listening to the podcast, please do me a favor and subscribe and like. The more people that listen, the happier I am, and the more the more people I feel like I can educate. In addition to that, if you do not have Coinbase or you do not have Stash, please take a moment to sign up through my links. You guys get some money back, and I get a little bit of money. And I don't charge anybody to listen to this, so anything you could do is really appreciated. Okay, so let's get into the first story of today, and this is an incredibly depressing story. But it's important. It's important if you live here in the U.S., and quite frankly, it's important if you live abroad. As you know, there is going to be a huge debt ceiling fight coming up here. I believe, I don't know what the deadline is. I think it's towards the end of July. But we're going to take a look at this, and this is the biggest indicator. That people really aren't really bullish on the U.S. economy. That we've seen thus far. So today, the U.S. 3-month Treasury, the bond yield is at 5.19%, which is higher than at any point in the 2017 collapse. So what does that mean? What does that mean for you guys? What does it mean for me? It means a couple things. First and foremost, you're going to see... you're going to start to see a credit crunch on your current credit lines. And you're also going to see that the price of credit is going to be significantly higher. And so what does a credit crunch mean for the average consumer like you or I? Basically what that means is, let's say you have applied for a credit card and you have been approved for $10,000. You're going to start to see banks and other financial, lending or other credit originators go back and look at your line of credit, do some reviews, and start to say, hey, wait a minute. You know what? We probably shouldn't have allocated $10,000 line of credit to this individual. You're going to start to get things in the mail saying, hey, you know what? We love you as a customer, but your line of credit is no longer $10,000. It's going to be $4,000. And then the other side of things is you're not going to have the access, and you're not going to be getting, credit card applications in the mail. You're not going to have as easy access to purchase new vehicles, get new loans. And so that's what this is going to mean to you. And ultimately, this is going to drive us into, in my opinion, and I'm not an economist, but I did study quite a bit in economics. We're going to go in a pretty deep recession here in the U.S. Unless, somehow or another something can be worked out on the debt ceiling that, the institutional investors like. But right now, what I'm forecasting, what I can foresee, just based on this U.S. 3-month Treasury, is that we are going to go in a deep recession. As I said, the credit's going to be crunched, and there's not going to be as easy of access to capital. It's going to have a downstream effect to everybody's purchasing power. So, hey, listen, if you're here in the U.S., and probably, quite frankly, abroad, you guys need to be aware of this. It's really important. Anyways, I will link a live quote to the U.S. 3-month Treasury yield in today's show notes. So please, guys, take a look at that. Also, so that's the bad news. I did want to get into the good news, the exciting news in the crypto front. And I'll say this, for the last, week and a half, hey, we've been riding high. My accounts are up. Bitcoin hit the quoted price resistance of 30,000. I believe the last thing I read was the quote for Bitcoin was going to be 31,000 by the end of April. That 30,000 price marker was a huge deal. If you go to CoinMarketCap today, the total global market cap of crypto is over 1.27 trillion, which is a big deal because it had a hard time getting past 1 trillion. As I was saying, it had a really hard time breaking 1 trillion. And so, as you can see, everybody was kind of holding out for Bitcoin to hit 30,000. It has done that, and things are rocketing. Also, Ethereum has completed its upgrade, and it is up nearly 10% over the past week. One interesting thing of note that you guys should be aware of is, in my opinion, the Ethereum upgrade is essentially, rendering Polygon less useful. It's going to have less, space in the marketplace. So please be aware of that and do some research if you're heavily invested in Polygon. I was a big fan of Polygon, but I'm not as bullish now that Ethereum has done its upgrade. All right, well, let's get on to the next story. That was some good news, and I actually think that I think the market's going to continue to go up. A couple of trending gainers for the past 24 hours. I'm going to do things that are, top 100, but ICP, Theta, both up nearly 10%. A couple of losers are INJ and Woo Network, so kind of look out for that. Loopring is also down, and Flare, which was just recently added to Coinbase, which is a coin that I really like. And the reason I like it is because, Coinbase doesn't have XRP, and they're sort of intertangled. And to be fully transparent, I have put a little bit of money in Flare, FLR, so be on the lookout for that. I think whenever this news comes down from, XRP and they're fighting the government, if it comes down in favor of XRP, sky is the limit for them. I mean, it really, really is. It's an interesting piece of technology, and I think it's going to be widely adapted, throughout the world, quite frankly. So that is a coin I really like, and if you're on Coinbase like myself and can't get it, check out FLR Flare. Okay, one other story that I want to touch on, and I think it's one that you'll find quite interesting. It is, I guess we'll do the Bloomberg version. Okay, so this goes more into the FTX collapse and failure. And when I read this, and I read this about a week ago, so I'll be quite honest with you. I don't have everything off the top of my head, but I will reread some of it to you. My God, it's shocking how ridiculous these folks at FTX are. It's like I don't even know how to explain it, but essentially it's like a child who somehow got lucky and essentially won the lottery and just kind of did whatever the hell they wanted. Quite frankly, screwed whoever the hell they wanted, and had no idea how to run a company. So I'm just going to read the headline, and then we'll go into a couple pieces on this. Actually, I pulled up the Business Insider article. So failed crypto exchange FTX spectacular collapse was due to hubris, incompetence, and greed, says first debtors report. Hubris, incompetence, and greed led to the implosion of crypto exchange FTX. The now defunct entity's debtors said in a Sunday report detailing control failures at the exchange. Mind you, this was last Sunday when this came out. In a 39-page, strongly worded report filed to the U.S. Bankruptcy Court for the District of Delaware, the debtors, which includes FTX trading and affiliates, further alleged that the FTX lacked basic basic, guys, accounting and financial controls, and one was under a command of a small group of individuals who stifled dissidents. These individuals stifled dissidents, commingled and misused corporate and consumer funds, lied to third parties about their business, joked internally about their tendency to lose track of millions of dollars in assets, and thereby caused the FTX group to collapse as swiftly as its heads grown. The debtors wrote in their first report since the exchange collapsed in November. While FTX group's failure is novel in the unprecedented scale of harm it caused in nascent industry, many of its root causes are familiar: hubris, incompetence, and greed, they said. FTX implosion was shocking swift. The exchange worth $32 billion in early 22 filed for Chapter 11 bankruptcy on November 11th of the same year after a week of liquidity crisis. Sam Bankman-Fried, a high-profile co-founder in the exchange and former CEO, pleaded not guilty in the U.S. government's criminal case against him and is scheduled for a trial in October. Gary Wang, another co-founder, and Caroline Ellison, that was SBF's girlfriend. We all know what she looks like. Former CEO and FTX subsidiary Alameda Research have pleaded guilty and are working with prosecutors. Former engineer chief Nash also pleaded guilty. Goes on and goes on. Okay, so we're just going to look at three key allegations from the debtors report, and these are ridiculous. Sorry, I'm clicking a button here. A lack of management and governance controls. This report alleged that management and government at FTX were largely limited to Sam Bankman-Fried, Singh, and Wang. For most parts, FTX also lacked independent or experienced personnel in finance, accounting, HR, information security, lacked any internal audit function whatsoever. The debtors stated in a filing board oversight was effectively non-existent. They added the company also didn't have an organizational structure at the time of bankruptcy file and had no idea how many or who their employees were. Here's number two, a lack of financial and accounting controls. Now this one's interesting. The report states that FTX relied on a small, unnamed external accounting firm for nearly all of its basic accounting functions. The accounting firm appeared to have no specialist knowledge of cryptos or international financial markets. The debtors did not provide further details of this appointment. There is no evidence that FTX Group ever performed an evaluation on whether its outside accountants were appropriate for their role given the scale and complexity of FTX Group and business, or whether they possess sufficient expertise to account for a wide array of products which FTX sent. Okay, here it is. Another issue cited in the report was the submission of expenses and invoices on Slack, which were then approved with emojis. These informal imperial message systems were used to produce approvals for transfers of tens of millions of dollars, leaving informal records such as transfers or no records at all. So they were transferring tens of millions of dollars and sending emojis as an approval. I mean, there's just no way. There's just no way they knew where any of this stuff was. And then number three, a lack of digital asset management, information security, and cyber security controls. I mean, this is just incredible. This is just incredible. Quite frankly, I'm dumbfounded. Another thing I'll say, and there's another article, we're not going to get into it, but the former CEO of FTX essentially got into an argument with Sam Bankman-Fried, and he quit because they decided, hey, there was an argument, and we're just going to cut your pay. We're not going to give you a bonus this year. And the bonus was worth lots of money. So, I mean, this is just unbelievable. The guy just did whatever he wanted, and there was absolutely no stopping him. All right, now we're going to get to article number 2 of the day, and this is really interesting. It just came out. I don't know how serious this is, or if they're even. Anyways, I'll start by reading the title. Coinbase could move away from the U.S. if no regulatory clarity is issued. CEO Brian Armstrong said. Armstrong said anything is on the table in terms of crypto exchange plans should greater regulatory clarity not emerge in the U.S. And see, quite frankly, I'm on the opposite side of this. I think the less regulatory intervention, the better. But I can see from a business perspective, you just want to know the rules that you can operate in. And this is on CoinDesk's website. I will place it into the show notes. Coinbase CEO Brian Armstrong indicated that the crypto exchange would consider moving away from the U.S. if the regulatory environment for the industry does not become clear. Anything is on the table, including relocating or whatever is necessary, he said, after former UK Chancellor George Osborne asked whether he could see Coinbase leaving the U.S. at FinTech Week in London. I think the U.S. has the potential to be an important market for crypto, but right now we're not seeing the regulatory clarity that we need, he said. I think in a number of years, if we don't see that regulatory clarity emerge in the U.S., we may have to consider investing more elsewhere in the world. So there you go. That's it from Coinbase. I think they're probably the current leader in the U.S. exchanges right now, irrespective of Binance. Another article I saw yesterday, and this sort of piggybacks on this, is the SEC. I'm just going to type in this article because I don't have it right now. The SEC is suing. They're basically suing another exchange, and as soon as I pull up the article, I will talk. Okay, yeah. So they're suing another exchange, and the exchange that they're suing, and this is from an Axios website, is Bittrex. They levied a complaint against them. And quite frankly, in the past 6 or 7 months, this is probably the third or fourth lawsuit I've seen the SEC bring against exchanges. And, Bittrex actually also left the U.S. Because of regulatory uncertainties. But, in my opinion, what this is going to do, yeah, maybe Bittrex did something wrong. I don't know. I'm not in the SEC. I don't know the ins and outs of the case. But like I said, this is about the third time I've seen this happen to an exchange. And it is going to severely limit the access to U.S. consumers in terms of exchanges, and really very prohibitive to any potential new players in the space. So it's really something to keep an eye on. I will just read a little bit about this, but not a whole lot. I will link it to the show notes for you to take a look at. And then we're going to get into one other story and something I find really interesting and something that you guys should be aware of. The Securities and Exchange Commission is suing Seattle-based Bittrex less than a month after the crypto exchange said it was leaving the U.S. market due to regulatory uncertainties. Driving the news, the SEC on Monday charged the platform for illegally operating a national securities exchange, clearing agency, and brokering service in the service U.S. investors. The lawsuit also names former chief Bill Sahara and parent company Bittrex Global. The complaint argues that Bittrex was purposefully non-compliant and not unclear. A message to SEC Chair Gary Gensler also tweeted Monday. It alleges that the company, over the course of Shahara's tenure, purposely evaded rules that it knew applied to it, coordinating with crypto issuers to scrub certain statements that would otherwise preclude the asset from trading on Bittrex platform. Like with other SEC complaints that investigate matters that happened years ago, some more obscure tokens are back in the spotlight. OMG, ALGO, Dash, TKN, NGC, and IHT were all named as securities in the complaint. This is a bit ridiculous, but all right. Okay, so you guys can read the rest of this. The SEC is basically, going after another exchange, as you can see, and they're calling token securities again. So there it is. That's it. That's it for that. All right, so let me pull this up. 1 billion gold. All right. So as you guys know, I'm not really big on the dollar right now, and it's not because I don't think I don't think the dollar could be the world's reserve currency for a long time. I think the way it's trending right now, we're gonna have to do something to intervene and help save the dollar. So as you know, China, Russia, Brazil, Saudi Arabia, and I believe India now in certain trades are all trading in their local currency, and they're not exchanging things to the U.S. dollar, which is certainly hurting the future of the dollar as the U.S. reserve market. Now, places like Germany and Japan are still heavily invested with the U.S. dollar, which is sort of the saving grace. But unfortunately, this war in Ukraine has really accelerated the move away from the dollar. So what are people doing out there? People like Robert Kiyosaki, the author of Rich Dad Poor Dad, other folks, what are they saying? They're saying, hey, invest your money in gold, invest your money in silver, and invest your money in Bitcoin. I don't know what's going to happen to the dollar. Nobody knows really, but certainly there's going to be some deleterious effects by what's going on in the world with these other countries trading in other types of currency. So if you take that and you keep that in mind, what is the next logical step to somebody who cannot get access to gold or silver? Well, they're going to invest in crypto that is tokenized to either silver or gold. So this article, and this one's from CoinDesk, but I've seen it pop up, a similar article, not this exact one, probably 3 times over the past week through various content creators. And it's interesting because these are 2 things that you should look at. So tokenized gold surpassed $1 billion in the market cap as physical asset nears all-time price high. This is a type, and this is going to go into what tokenized gold is. This is this type of stablecoin that is pegged to the price of gold. Well, the tokens on the blockchain represent ownership of physical gold managed by the issuer. So in other words, who's ever in charge of these, and we'll get farther down, they own this gold, and you are basically having a token that is backed by the physical gold that these people own. So tokenized gold assets surpassed $1 billion in combined market capitalization on Tuesday, according to the data by crypto price tracker CoinGecko, as gold price neared an all-time high. Tokenized gold is a type of stablecoin that pegs its price to gold, while the tokens on the blockchain represent ownership of physical gold managed by the issuer. It offers investors a way to get exposure to the precious metal without management fees of an ETF or the burden of storing gold. I mean, come on, who's going to put gold bullions in their freaking basement? Let's be honest. The 2 largest gold stablecoins by far are PAXG Gold, issued by New York-based fintech firm Paxos Trust Company, and Tether Gold, issued by Tether, the same company behind the $80 billion pegged U.S. stablecoin USDT. At the time of the publication, I don't know, this was 3 or 4 days ago, the market cap of PAXG Gold and XAUT is $518 million and $499 million, respectively. The price of gold, a traditional safe haven asset, has risen since March amid investor concerns about failing banks and possible government bailouts, which would lead to expanding fiat money supply and currency devaluation. The metal was trading at $2,021 per ounce on Tuesday. So this is about a week ago. Anyways, this is really something that I find interesting and something you guys should be looking out for. In fact, like I said, Robert Kiyosaki, he's a really big influencer. Predicted lots of, I believe it's the last housing crash, and there's other people out there saying silver, gold, Bitcoin, the 3 things you should look at. But again, these 2 types of coins offer you really the ability to get into gold without any fund management fees. So anyways, that's the show for today. Once again, please do me a favor, like, subscribe, respond. Check me out on Twitter. Check me out, check me out on Twitter, check me out on YouTube. And I really do appreciate your time, and I look forward to hearing or speaking with you guys next week. Take care.